All right, I've got a hot penny stock that I'm going to bring to your attention. Now, it's not one that I'm going to suggest that you guys buy right now or even on market open tomorrow. I'm going to give you guys the price. You know how I do it? I bring it to you before the move. I bring it to you so you can think about it, chart it yourself, and prepare and consider whether it's a good investment for you. Now, I am comparing this penny stock play that I'm getting ready to introduce to you guys, asking the question, could this be the next SoundHound? It's not the actual penny stock. It's not the company itself that interested me. It's what one of the big tech players is doing with this company that's brought it to my attention. So the news story and the fundamental opportunity together with what might happen in the charts could give us the potential for a breakout explosive move. I'll just tell you up front, penny stocks, most of the reason why the price of these stocks is down in the gutter is because they don't have positive cash flow. They don't have access to money, and they're always up against time and the prospect of them diluting the shares, having to raise more capital or raise more debt in an effort to keep going until they begin to generate a profit. That's the same boat that this company is in. But again, it's going to be that news story that came out today on their earnings that potentially reveals that this could be a catalyst that could potentially cause this stock to have found its bottom and potentially move higher in the near term. This is the Stocks with Josh show. I appreciate all the guys and gals out there that hit the like right at the beginning. It pushes the video out to more viewers. If you're not part of the Stock Josh fam, hit the subscribe and join. I am not just showing you or demonstrating to you guys on this page what I know. I'm trying to teach you so that you know what I know. Every single video is going to be a technical class, but also we're chasing those dollars, we're chasing that paper, and we're trying to make some money with the hot plays. Now, I want to quickly shout out a trade that I gave the Stock Squad Patreon this last week for CLS, Celestia. Now, this was a hot play, and we got it right when we needed to, and it skyrocketed today. From the options that I had originally entered, we're up 100%. Now, I've actually gotten in and out of those, so I've achieved more than 100%. But hey, drop a comment and let me know if you guys made some money following me over in the Stock Squad Patreon. That's where Stockmo, Keenan Grace, Stock Up with Larry Jones, and myself are giving plays. Let me know if you guys made some money on CLS. It hit the number that I thought it would. Now, the reason why I'm bringing it up real quick here is not because just for the sake of celebrating, but also to give you a warning. Let me take you guys into the Celestia chart so you can see what that warning is. All right, this is Celestica. I'm not pronouncing it correctly, but you guys get the big picture. And here's what I want you guys to see. This is very largely a impending head and shoulders pattern. Now, getting up to this $48, $49 level was what was expected. But this is an area of rejection, so let me go through a few things. One, we are just underneath the LUXALGO indicator, showing us that a potential take profit is $50.67. This could continue to run higher, but we're definitely up in the resistance cloud at the moment. Here's what we're going to begin to watch for. All right, we want to watch and see how this ends up working, because there's your left shoulder, there's your head, and this could end up being a right shoulder. Now, head and shoulders patterns, when they play out and officially get confirmed, they have a very strong move to the downside. And I would expect that if this does turn out to be a confirmed head and shoulders pattern, which it hasn't yet, I would suggest that we're going to get down to $35 easy on CLS. So be aware of that, guys. Let me take a very quick station break before I get into that chart and do a shout out for the MOOMOO investment app. Guys, if you need better mobile trade tools, personally, I think they're the best. But if you put $100 in, they're going to turn right around and give you 10 fractional shares of the Magnificent Seven. Now, here's where I'm going with this, okay? Let's talk about the broader market and what I see happening this week that I want you guys to have a big picture view before we get into everything else in this video. I've been telling you and warning you that this Friday, we've got the Consumer Sentiment Report, which is a leading indicator. Personally, I believe that it's not going to be good and the market's going to have a bearish reaction and we're going to see some ugly selling, and it could get pretty bad. We've been seeing a precursor to this event with extreme moves price volatility moves that look a lot like distribution, which means that we're getting very close to the potential end. But I've said that the S&P 500 is going to contend with 5,200 level. The SPX is going to contend with the 5,200 level by the end of this week. I'm guessing that it's going to get rejected. I'm guessing that we're not going to end the week up above that level. Now, I don't know. Ultimately, I think we're at the place where bad news becomes good news. So even though the market's going to have a jerk reaction to the consumer sentiment leading bad data report, I could easily see it then turn around and go green again. Maybe Monday, maybe even Friday, we don't know. But let's just say it was Monday, because they would say that this is causing market participants to see that the Fed will cut this year and will cut more significantly because we're seeing more contraction as a result of his elevated rates. And so that's where we're getting to the point where the markets get choppy and confused because bad data becomes good data. So I wanted you to have that overview. I think our bigger concern is going to be inflation, which does beg the question of what type of cuts are we actually going to be able to get and how long is the Fed going to be able to sustain those cuts. All right, but I wanted you guys to have that view. Let's get into this penny stock play. All right, the penny stock play that I want to talk to you guys about today is Luminar Technologies, ticker LAZR. And it's the Luminar Technologies news. They came out with earnings today. And I'm going to get into that news story, but let me quickly tell you guys what these guys do in case you've never heard about them. Luminar Technologies is an American company that develops vision-based LiDAR and machine perception technologies for self-driving cars. This is absolutely going to be part of the AI boom. Now, it's not specifically AI that they're using. They're developing the visioning software and technology that enables these cars to basically see range of depth and see objects that they potentially could run into. The company uses laser-powered LiDAR technology to generate a 3D map of a car's surroundings in real time. This technology is meant to help cars automatically brake in front of unexpected pedestrians. And so this is one of the points I want to make. The fact is, Tesla, even though they are a technology company and they're pushing this giant initiative and innovation forward for robo-taxis and cars that will drive autonomously, the fact is they're not going to be the leader in every single technology. Now, previously, Elon Musk had dissed on this company and their technology, only for us to find out that in this last quarter, they were this company's largest customer. Let me share that news story with you. Tesla surprisingly becomes Luminar's largest LiDAR customer, contradicting Musk's past criticism. This basically goes on to say the company also reported a 45% increase in revenue year over year, and the largest contributor of that was Tesla. And so there is the basic fundamental idea. We have married yet again a potential small, unprofitable tech company to a much larger player that can absolutely funnel a ton of money into this. This is what happened with SoundHound. We identified them as an up-and-coming, relevant AI technology that later NVIDIA turned out to be an investor in, and it blew that stock up to $10. SoundHound is one that you're going to find me giving technicals on over in the Stock Squad Patreon. It's come down a lot. And I gave everybody a buy level. We've had a beautiful little pop from there. I'm going to continue to cover them. But Luminar is the one to watch today. Now these guys, let's go into the chart, and I'm going to show you guys how ugly the chart has been and what we need to see it do to get bullish. It's just right now a bullish idea to put on the watch list, but if it begins to do some of the things we expect it to do, this might be one that we could make some money on. So let me take you into that chart. All right, let's go through it very quickly. The first thing I want to point out to you guys is that this chart has been absolutely punished, okay? We're looking at the weekly candles, which means that every single candle you see represents an entire week of price action in the market. Now, back in time, this thing came out at around $10. A lot of companies seem to come out at around $10, and it had some upward movement until eventually it took off like a rocket ship, going up nearly $50, ending up slightly below 48. We got a big bearish candle that then presided over a long decline ever since. That was back in 2019 that it took off, and all the way for the last 4 years, this thing has been under a descending line of resistance. So right off the beginning, does not look good. But The fact is, with this fundamental news story, this 45% increase in revenue driven by Tesla, now we want to say, okay, hey, there might be an opportunity here. Now, let's point out what it is that I need to see, because this is not a buy, guys, right now. These are the things I want to point out to you. Structural resistance, in my view, is right around $2.26, okay? Now, the lowest low that we've had recently is $1.24. And we're also going to be keeping an eye on this structural resistance above at around $4. It happens to coincide with the 50-day moving average. So this is the big picture view. It came up from $1.24, nearly 100% to around $2.26. We have a little bit of a rejection candle, and I do think that we're going to pull back. The big question is, where are we going to pull back to? Where would be a good area to buy this? Well, I'm going to give you guys that we have potentially an inverse head and shoulders forming on this chart. So right around $1.65, we've got potentially the left shoulder. This price of $1.22 was the inverse head. And if it were to come back to around $1.60 to $1.65, this would be an area to possibly consider taking a position, putting your stop loss in maybe 10, 20 cents below that price. Watch it very carefully, because if we do cross this very long-standing historic line, it's very possible that we're going to make a push to backtest this 50 MA at $4. And this could be just the initial move. We could end up finding that it comes back and holds support at around 3 and continues to build from there. This very well could be a bottoming pattern. If they continue to be a big supplier of technology to Tesla, I can tell you that if they're leading in this area, then they're going to continue to grow, because this technology is going to be relevant across the board with AI. Don't forget that Tesla is working on those robots, and they're also going to need to know how to interact with their space by creating this real 3D imagery of what is near them so that they do not cause harm. And so this is an interesting company, a way beat down play. Don't get in it too early. I gave you the risk profile. Keep it on your radar. I'll cover it more in the Stock Squad Patreon. If this was helpful, hit that like, hit the subscribe to keep getting more. Peace and blessings to you guys. Drop a heart and say hi in the comments. We'll talk to you soon. Bye-bye.